If you've been struggling in your trading lately, I have a very simple 4-step trading model I think you're gonna like, and let's break it down in less than a minute here. So this 4-step trading model I call the Pulse model, and it always begins with step 1, just finding a bias. Are we bullish or bearish? And we're finding the answer to that question over here on the highest time frames from a top-down perspective, starting from the monthly down to the weekly, daily, 4-hour. All right, where on the monthly there was nothing really notable. On the weekly is where we start to get a sense of bias, right? To find bias, I use 2 things: candlestick logic and order flow. Over here, we're using candlestick logic to gauge our bias. And all CSL is, candlestick logic, is literally just looking at the candles. Are they respecting or disrespecting previous candle highs and lows? So this candle I'm pointing to right here, you can see respected previous week's low, meaning our bias for this next weekly candle is to seek previous week's high right there. That's our draw on liquidity for the week, giving us a bullish bias. Now, coming into the 4-hour right here, we have this no resistance area, which is what I really liked about today. And all that is simply, you see this area up here, this is a daily swing high as well as a very prominent 4-hour swing high. That area right here, from this high to the previous week's high, there is no resistance in the form of an opposing PD array. If you look to the left right here, there is literally nothing but that previous week's high as the next draw on liquidity, meaning price action over here. Let me just move my face. This price action right here is likely to happen very, very fast and aggressive with, again, no resistance towards that previous week's high, giving clarity. Now we had step 1, which was bias, which is bullish. Now we need step 2, which is the narrative. The narrative is simply, if we're going higher because we have a bullish bias, where can we actually move higher from? And we're finding the answer to that on the narrative timeframes, which for my Pulse model is the 4-hour, the 1-hour, and right here as we're on the 15-minute. We are using those timeframes as a compass to show us if they are pointing in the direction of our bias. We can use those narrative PD arrays right here, those compass PD arrays, as a level to now look for entries inside of. So on the 15-minute coming into the New York session, we see this 15-minute for Valley Gap. We can move higher off of in the no resistance area towards previous week's high. Boom. There's the answer to step 2. Now step 3 and 4 sort of go together, right? That's entry, which is step 3, and time is step 4. You want to have your entry aligned inside of a kill zone, which right here we are in the New York kill zone. So step 3 and 4, check. And the entry itself is simply an impulse shift off of that 15-minute, right? Using proper time frame alignment, we're going from a 15-minute time frame into a 1-minute entry function. And as you can see right there, there's the 1-minute entry function, the impulse shift. By the way, if you don't know what that is, just comment shift below. I made a full video on this and I'll DM it to you right away. Entry right there, stop loss at the swing low, which creates that impulse shift, and then you just target a static 2R. And that's pretty much it. Those are the 4 steps: bias, narrative, entry, time. Simple.